I think that the liquidity cycle at the central bank level is bottoming out. It's about to turn back up. We have been tightening monetary policy for years now, and despite that, Bitcoin's been able to make new highs. And again, that's because of the level indebtedness and the fiscal dominance. When you combine the two, I stand by it. I know I take a lot of shit for it. I continue to say I think this cycle is 250K to $1 million. My message continues. Buy every dip.
Mallers highlights a crucial pattern. In July 2024, the Federal Reserve cut interest rates and the Bank of Japan raised theirs. This caused an unwind of the global carry trade, one of the largest financial structures in the world, where investors borrow cheap yen at near zero interest rates, convert it into dollars, and invest in higher-yielding U.S. assets. When the Bank of Japan hikes rates, that trade collapses. Investors must unwind positions, repay yen debt, and sell risk assets. And Bitcoin is usually the first thing to move because it's the most liquid, least regulated, and fastest to reflect global sentiment. According to Mallers, a similar situation may happen again. The Fed is expected to cut on December 10th, while the Bank of Japan is expected to hike. This creates liquidity stress, and Bitcoin reacts immediately.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
What is Bitcoin telling us? Global liquidity, no bueno. So I read the tweet. In July 2024, the Fed cut rates while the Bank of Japan raised rates, leading to the unwind of the carry trade. Bitcoin capitulated into it and found a low 1 week later. Good chance this happens again on December 10th. The Fed cuts and the Bank of Japan raises rates. So maybe Bitcoin finds a low mid-December. Now, the point of this is not to tell you guys Bitcoin's going to find a low in mid-December. I've said it once, I'll say it again. I have no fucking idea what Bitcoin's going to do in the short term. No idea. Nor do I think it's that important. If what Bitcoin's going to do over the next few weeks is that important to you, you should be very careful. You should probably get a little bit more humble and stack a little more sats. But what I think is interesting and what we talk about on the show a lot is understanding the world around us, understanding the indebted sovereigns, understanding how they're printing money, where they're printing money. Because the mainstream media is lying to us, it's really difficult to find a source of truth. And so when you see things like, oh, Bitcoin's run, what do all the traders on Twitter like to say? This is a dead cat bounce. I don't even know what that means. This is a dead cat. Okay, well, listen, and people say, the bull runs over. This is a dead cat. See that cat on the ground? It's dead. Bull runs over. I say, okay, well, no, listen. If the carry trade, if Japan is going to go from 20% chance to raise rates to 80%, and it's going to impact the carry trade, Bitcoin is going to start screaming first because it is the liquidity smoke alarm. It is the only free market. It is the truth source we have globally. That's what's happening. The point is, we're in the middle of a liquidity crunch. Again, that's kind of been my consistent theme, is that today QT ended. So first of all, for all of you, QT ended today, quantitative tightening. Quantitative easing, QE, is very likely to resume in the near term. We're very likely to get rate cuts going forward. Trump now knows, he said and communicated, I know exactly who I want as my Fed chair. We have looser regulations for the banks. They're going to be allowed to use unlimited leverage for treasuries, create a lot of credit, create a lot of new money. We have 50-year mortgage, we have stimulus checks, we have midterms. I think that the liquidity cycle at the central bank level is bottoming out. It's about to turn back up. We have been tightening monetary policy for years now, and despite that, Bitcoin's been able to make new highs. And again, that's because of the level indebtedness and the fiscal dominance. When you combine the two, I stand by it. I know I take a lot of shit for it. I continue to say I think this cycle is 250K to $1 million. Sue me. And the cycle's over. I fundamentally disagree with that. Why did Bitcoin go down? What's going on? Is a dead cat bouncing? No. The Japanese central bank is going to have to tighten rates. And this brings us all the way back to the Fed, the United States, and it helps us understand a lot of the fighting. So I'll read this last slide. We've gone from guaranteed December cut a month ago to not cut last week, back to a likely cut now, all without any meaningful new economic data as the shutdown fallout continues. The Fed's communication process seriously needs to be revamped. This is absurd. And so if you guys want to understand why Donald Trump, why Scott Bessent, why these guys have been aggressively campaigning for a lower rate, a lower Fed rate, and more aggressive monetary policy, is because they need a weaker dollar. They really desperately need the dollar to weaken and for the Fed to cut if Japan is going to have to hike. They need looser monetary policy. It's really going to take a very tightly correlated effort from the Fed and from the U.S. Treasury to financially engineer their way out of this with the least amount of pain. There will be pain, undoubtedly. There has to be pain. The question is how much, and the question is to who. And the question they're asking themselves is, can we get reelected despite it? And so my expectation is, well, first of all, we'll see how the next week plays out. Bitcoin is front-running risk assets. If Bitcoin remains this low and liquidity is not injected and the Bank of Japan does not revert on the expected rate hike and nothing gets aggressive on the U.S. side, the stock market will melt down and will fall as well. All risk, everything to do with Japan, the yen, and the global carry trade. The yen is the world's margin, 100%. And so we will see how long this is allowed to persist for. But my message continues. Buy every dip. The United States cannot afford to have assets go down over a persistent time frame. The U.S. stock market is a Ponzi retirement account for the United States. They need it to both store wealth for Americans and for Americans to monetize wealth where they earn tax receipts. If the U.S. doesn't have a stock market that's up 10 to 15% a year, it is insolvent because it cannot afford the interest payments on its debt. So all dips should be bought. We are living through a prolonged fiscal dominant cycle. None of these dips scream Bitcoin's going to 10K. None of these dips are talking about cats. This is all to do with global liquidity. And I know it sounds weird, but what Bitcoin is telling us right now has everything to do with Japan.
Mallers mocks traders calling every pullback a dead cat bounce. He says the current move is entirely about global liquidity conditions, especially Japan. He shows a chart where Bitcoin drops sharply. The USD-JPY currency pair drops sharply. Both moves happen at the exact same second. This is the telltale signature of a carry trade unwinding. Japan's 10-year bond yields are now at their highest level since 2008. The Bank of Japan is forced to react, and when they do, global markets shake. Crypto, being the most liquid and least regulated, always moves first.
The U.S. government has to make a choice. On one side, you continue to fight inflation, you continue to keep rates high, you don't provide the liquidity, and the financial system as we know it begins to deteriorate and collapse. We enter some form of austerity, and we go through a global reset. On the other side, they print the money. They backstop AI. They give the $2,000 stimulus checks. They deregulate the banks. The Fed cuts rates to as close to zero as reasonably possible. They give out the 50-year mortgage. Okay, everyone's pulling out of their 401k and the new crisis income required is 140 grand. Here, take stimulus checks. Oh, no one can afford their mortgage anymore? And we're seeing delinquencies? Here, we'll establish a housing crisis and give you a 50-year mortgage, which should lower your monthly payments, raises the inevitable cost to own a home. You'll probably die in debt for your home, but at least you can afford your monthly payments now. Oh, AI is the only real growth that we have, and we need to grow our way out of this, quote unquote. Here, government backstop. Oh, we need to weaken the dollar or else we can't unwind from being disrupted by China. We can't support the growth of AI. We need rates to go as close to zero as possible. Here, let me bully the Fed and, work my way to get everyone fired and implant my own Fed chair. So there has to be a choice made. And the thing I continue to predict and say on this show is the choice is they're going to print their way out. It's a soft default via inflation. Why is everyone voting for this? Why does everyone vote for printing the money? I said, you don't understand. If I ran for president and I said, here's what we're going to do. We're going to go through the worst level of depression we've ever been through because we deserve it. Because we're $38 trillion in debt. And we need a hard reset. And our lives are going to suck for the next 10 years. But then we're going to be so good and we're going to be built on proof of work and sound money and net production. And we're going to reindustrialize. The guy next to me running says, I'm just going to print money and give you a bunch of free shit. Who's going to win the election? So you guys have to understand, not only are politicians incentivized, but the people are voting for this. If the people want to really go through pain and realize the losses and adopt something like Bitcoin, we can vote for these things. So anyway, I love the congrats, Dylan, in the chat. I love it. Anyway, that's the which way Western man is. The everyday American is getting slaughtered right now. They have been in a recession for a very long time. All of the economic growth is coming from AI. It's coming from big tech. It's coming from the Mag 7. Trump has a lot of money printing if he wants to fix this problem. They have to cut rates. They have to start QE. They have to deregulate the banks. They have to hand out stimulus checks. They have to establish a housing crisis and create a 50-year mortgage. All of this is not my words. These are their words. And Bitcoin at 86,000? I'm supposed to freak out? I'm sorry, I'm allergic to cats. I don't know what a dead cat bouncing even means. Not on this show. Not on this show. I'm bullish, guys. I really am. I think they got to print a lot of money. I think Bitcoin is sniffing out the liquidity problems that exist today, and they're real. So this tweet from Arthur, BTC dumped because the Bank of Japan put December rate hike in play. USD JPY 155 to 160 makes the Bank of Japan hawkish. What is he talking about? And what are you guys looking at? So for those listening on the podcast waves that are not viewing the screen I'm sharing, what we're looking at is in white BTC USD. So the price of Bitcoin. And you can see it stagnating sideways, a little bit of up chop, a little bit of down chop, and then it looks like it got shot and fell off a cliff. What are we looking at in orange, weirdly? That is the dollar-yen currency rate. Weirdly, guys, it shows very similar pattern. A little chop, but mostly sideways, and then it looks like it got shot and fell off a cliff at the same exact second. What's going on? What is this relationship? This from Zero Hedge. Central banks have completely messed up market messaging. First, the Federal Reserve's schizophrenic communications sent December rate cut odds from 80%, then to 30%, then 100%. And we've talked about this on the show. December rate cuts for the Fed, for the US dollar, were guaranteed, and then they backed off it and Bitcoin freaked out, and now they're back to guaranteed. And now the Bank of Japan just sent December rate hike odds to 80%, down from 20% only 10 days ago. So the cost of capital, the cost of money, the price of money. There's really two ways to think about liquidity globally, macroeconomics, fiat. There is one, what is the price of money? And two, what is the supply of said money? Now, traditionally, I'm more interested in the latter, in the supply of said money. Why am I interested in that? Well, we've seen Bitcoin go from 16K to 126K while rates were at 4+% in the United States. And that was on the back of the fastest rate hike ever. And I've explained on the show, the reason Bitcoin was able to rally so much is because liquidity came from the US Treasury. This idea of fiscal dominance. Global sovereigns, and specifically the United States, is so indebted that it has to find liquidity at all costs. It can't solely rely on the Fed anymore. You get this idea of fiscal dominance when the US government is really driving policy for money. So to me, the quantity of money has been more important and will continue to be more important. But the other very important variable is the price of said money. And the price of said money is set by central banks, and that is known as the rate. And so what we're seeing is all of a sudden, Japan went from very likely not to hike rates to very, very likely to hike rates overnight. Now, why is Japan hiking rates relevant to Bitcoin at all? It is so funny typing out these titles like, what does Bitcoin, this magic internet money that this anonymous person leaked on a mailing list, tell me about Japan, this country on the other side of the world, as I sit in Chicago? Well, let me tell you. So I read this tweet. This chart is single-handedly bringing the entire crypto market down. Japan 10-year bond yield is now at its highest level since 2008. Bank of Japan is about to do a rate hike at the next meeting, which will make things worse. Cheap borrowing will be over, and people will sell their assets to repay the debt. Crypto is the most liquid asset, so it's dumping the most. I think we can soon see the impact in other risk assets as well.
Mallers concludes with one of his strongest macro arguments: the U.S. stock market is effectively a national retirement system. If it collapses, consumer wealth collapses. Tax revenues collapse. The government cannot fund its debt. Political chaos erupts. Therefore, all dips will be bought because the alternative is national insolvency. Bitcoin, in his view, is simply the purest reflection of this reality. The first asset to sniff out liquidity shortages and the biggest beneficiary when central banks inevitably step in. So what is the message Jack Mallers is sending? Not that Bitcoin will bottom in mid-December, not that anyone can predict the next few weeks, but that Bitcoin is signaling the truth about global liquidity long before stocks or bonds react.